right stock at the right time.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you're watching Indian Open. Let's go straight to the headlines. Donald Trump threatens to pull out of the WTO if the rules are not more favorable to the United States. That is a Bloomberg exclusive. In another exclusive, Berkshire Hathaway chief Warren Buffett says he will continue buying stocks as they remain the most reasonable investment available. Back home, Chanda Kochar holds on to the ICICI Securities board seat. She was reappointed as director with a comfortable margin. Petrol and diesel prices touch all-time highs in India after oil marketing companies hike prices for 6 days in a row. And the Indian women's relay team and athlete Jinson Johnson bring home the country's 12th and 13th gold medals at the ongoing Asian Games in Jakarta. I must say, we may argue about we still being in the 8th or the 7th position as the case may be, but this is probably the best showing that I have seen in a really long time or heard about in a really long time, and that really pleases the eye or the heart from an Indian perspective, if you're a sports fan, of course. However, sports notwithstanding, let's take a look at the trade setup for the day. Remember, the world markets are doing precious little. Firstly, the news from around the world, and boy, there is a plethora of news, a couple of which I've mentioned right now, a couple of which you will hear on First Word when we play out those interactions, both with Warren Buffett as well as Donald Trump. It's a packed First Word, so mind you for that. But let's first talk about what's happened aside of what came out in the interaction with Bloomberg News. Argentina's central bank has hiked rates to 60% in order to, of course, counter the inflationary pressures in the economy. But this is arguably the highest interest rates that exist around the world. So there is a crisis situation out there, and it's showing in the Argentinian peso as well as the central banking action. Well, that's not alone. Turkish lira fell post reports of resignation from the central bank of one of the key members, and that led to the Turkish lira fall as well. EU, in the meanwhile, has offered to cut tariffs on the US cars, so there is some development on the trade front. Remember, Friday is the deadline for Canada to join the North American Free Trade Agreement, or whatever it is termed, those talks as well. So there's lots that hinging on Friday's session, and lots that's happening on the trade front as well. The US-China spat continues, and China has told the US to be careful before the $200 billion worth of tariffs come into place as well. So lots that's happening around the world on the geopolitical front as well as on the economy front. But amidst all of this, at least for the US economy, the man who matters, Warren Buffett, says that he is going out and buying stocks as the alternatives, any of the alternatives, are not as attractive. In the interaction with Bloomberg News or Bloomberg, he spoke about how he cited the example of bonds, but started off saying that none of the alternatives available are as attractive as stocks from a 10-year, 15-year, 20-year perspective. And therefore, he is currently buying stocks as we speak. So that's what's happened around the world, and you'll hear a lot of slices of those conversations today on First Word as well, so I won't dwell too much on these. What about the trade setup? The texture of yesterday's session was slightly different from what we've seen the previous few days, in the sense that despite the fact that the market stayed low, the market breadth or the advance decline ratio was in the favor of the advances for most part of the trading day, in fact throughout the trading session yesterday. But there was a sharp drop in the number of stocks which are hitting fresh highs, or the number of stocks which are approaching those fresh high levels. It was almost a third of the usual number of stocks that are hitting. So just a bit of a pullback at the broader end of the spectrum, especially on stocks which are seeing new highs. However, we are starting off the new series. The max OI for the September series is at about 11,800 on the call side, and on the put side about 11,400. So at the start of the current series, traders expect that that's broadly the level in which we could have the new series shaping up. Let's wait and watch. There's still some time for that to happen. It's not a very large, it's not a very long series compared to the previous one gone by. So relatively a shorter series, but we'll get to know about it when we get to know about it. What about specific stocks to monitor in the session today? Well, lots of them. Firstly, Yes Bank. And frankly, I'm a bit confused as to how the market will read into it, because the directive that has come in is that Rana Kapoor may continue as MD and CEO till further notice. It is not asking him to step down. It is not asking him to stay put for another term. It is saying that he will continue as MD and CEO till further notice. And therefore, interesting to see how the market takes it. Very, very difficult to preempt really as to what the mind of the market would be when it comes to this particular thing. And remember, it has the potency to drive the stock either direction. So very interesting stock to monitor in the session today. Idea Cellular, it's been under a lot of pressure of late, but well, they've gotten the NCLT nod for merger with Vodafone. So important piece of news. We'll talk about it a bit later on. Some construction companies were in focus, would be in focus today. Dilip Bilcon has gotten a large order, but I thought PNC Infratech was interesting. It's been declared the lowest bidder for EPC project worth 2,000 crores. Dilip Bilcon has made it a habit of winning large orders. PNC Infratech, a relatively smaller stock, winning a large order. Let's see if this one has some reaction in the session today. HCC too would be in news, obviously, for obvious reasons, and we'll talk about that as well. So construction firms firmly in focus today. And last but not the least, Jet Airways. The Times of India has come out with that note or the report as well about examination of the books. Now, this remains a perennial drag or perennial problem or an overhang for Jet Airways. Interesting to see how this one reacts in the session today. 286 and counting. Let's see if this report brings the stock under further pressure in trade today. So, well, packed house and packed on first word as well. Let's tell you what's lined up. Firstly, on the domestic front, housing finance companies have a problem. Shraddha Babla joins in to tell us what is that. Then Nikki Mirchandani joins us to tell us why Coal India is all set to post its best August since listing. And then the two big global voices, the two Bloomberg interviews from the US. First, what Donald Trump has to say about the WTO. And then why equities remain Warren Buffett's favorite investment. We wrap up first word with that piece. But let's start off with two analytical pieces. Firstly, even as corporate insolvencies grab headlines, there is a smaller, less spoken about loan segment that is starting to show signs of stress. First quarter earnings of housing finance companies are clearly indicating a trend of rising NPAs. The segment, which was thus far considered to be safe and sustainable pocket of growth, may not be such a sure shot bet anymore, at least if calendar year 18 is to be believed. Shraddha Babla is standing by with the numbers. Shraddha, morning.
Right, morning Neeraj. So, so far last Friday, last of the major housing finance companies, which is LIC Housing Finance, reported numbers. There are still some like GIC which are yet to report. But what we have observed so far is that while the entire housing finance space continues to remain under pressure on account of this entire tight liquidity situation that we are seeing and the pressure on the spreads, incremental spreads that continues. What is now adding to fresh pressures for these housing finance companies is the trend where we have seen that there has been a rise in the retail NPAs of these housing finance companies. So what we have observed is that the retail NPAs have either continued to rise or they have at least, if not rise, remained at an elevated level for these housing finance companies. A part of that could possibly have to do with the fact that some of these smaller and newer housing finance companies have a larger share as far as lending to the small ticket average size home loan segment is concerned, and you have this entire affordable housing finance space where everybody wanted to go and start lending, and that's probably what has put pressure on some of the retail NPLs. So if you look at, say Repco Home Finance, there you can see that the NPAs have remained more or less stable at nearly 4%, but that's once again a large amount of pressure was coming from the retail LAP book for that one. You look at Aspire Home and the big spike that we have seen on account of this being a new player and them trying to lend to the affordable housing finance segment. So of course, overall, we know what that has done to the Motilal Oswal financial services stock. Then you also have Shriram Housing, which is a part of Shriram City Union Finance. There also you're seeing a big spike as far as the gross NPAs are concerned. Mahindra Rural Housing, which is again a part of Mahindra Finance, is another one, 16.7%. We've had the management clarifying to us many times that this is not the kind of loss or default rates that they actually land up seeing, but nevertheless a spike is what they have seen as far as rural housing is concerned, a spike even as far as LIC Housing Finance is concerned. So what we've noticed is these are all these smaller housing finance companies or the newer ones which have ventured into housing finance which are seeing these pressures, because on the other hand, when you see the likes of HDFC or Indiabulls Housing Finance, two big ones, we've actually seen that the gross NPA NPLs have come down. Now, Morgan Stanley has said that this rise in NPLs, especially for these smaller housing finance companies, is of concern, and they believe that these loans are not properly priced in there. And this is especially for the case of investors who are looking at these housing finance companies as a safe investment bet and something that could give them sustainable growth. So clearly, Neeraj, the rise in this affordable housing stress and pressure on margins is known, but once again we have the June quarter numbers and they only show that this pain continues. It probably reflects in the price of HFCs as well, given that they have underperformed as compared to some of the other asset financing peers. But again, the question really is, will the tide turn, or will these retail NPLs add to the pressures for some of these housing finance companies?
Yeah, the last 9 months have been a stark difference from what probably the last 9 years have been for the housing finance companies.
It hasn't. It probably has more to do with the rise in interest rate scenarios, but now you also have this NPL which has started coming in.
Yeah, and very interesting, and therefore it puts what these companies do in the next couple of quarters into a lot of importance. Shraddha, thanks for putting this into perspective. Well, housing finance as a space really has underperformed in a meaningful way. Okay, the next piece on first, what is about Coal India? It saw its volumes rise 11% in the first quarter of this financial year. That, coupled with pricing power, proved to be a heady mix for the miner. The stock is set to post its best August since listing. Nikki Mirchandani is here with what's keeping the stock going. Nikki, good morning.
Good morning, Neeraj. Actually, the month of August as a whole has been a blissful one for the entire metal index as a whole. You've seen all the stocks ending in green, or expected to end in green by the end of August. But then so is the case with Coal India. But then the thing with Coal India is that this August has been the best that we've seen ever since the listing, that's since 2011. I think it has been a rather jinxed August for Coal India entirely throughout the span of time. It's only in 2016 that we saw Coal India actually fetching some positive returns of around 2%. And that's now that the company has managed to clock, the stock has managed to clock gains of around 6%. Even on YTD basis, if you look at the company's performance, that's the best that we have in the span of at least 4 years. That's since 2014 that we're looking at the highest YTD performance on this counter. The key reasons, the 5 reasons I'd rather say that have been playing out well or have been auguring behind the rally of this counter is the price hike first. I'm going to start off with the volume actually growth first. Devil lies in the detail, where volume growth is in double digit at 11% for the month of June quarter, and this is probably one of the best growth rates that we have after 13% that we saw a few quarters back for Coal India. We've seen good demand coming in from power, non-power sector, and it's an operational pace, it's played by the end of it. So more the company delivers volume, the better it is for Coal India. Also, if you look at the price hikes, that is augured well, extremely well for the company. The company has undertaken 3 price hike, the effect of which is expected to flow down in the financials for 2019. And also, let's not forget the fact that the e-auction realizations, they have been wonderful. In fact, that's the highest that we've seen in at least 8 quarters for this company. Definitely augurs well because it's a high yielding e-auction realization, benefits more. Also, if you look at FSA realization, up till now you've seen FSA realization a tad lower. Even in this quarter, or the June quarter rather, we saw a sequential dip coming in on FSA realization, but then the grade slippage impact is now behind Coal India, and we can expect higher FSA realizations going forward. And also do bear in mind the fact that FSA realization of the company is a big proportion of the overall total realization. So definitely it's a net positive for the counter. And the last point is the peaking employee cost. Now, employee cost forms a heavy portion of your total expenses for Coal India. That is coming down. So definitely a positive for the counter. Even if you look at the
Now, just a quick question. What do FSA realizations mean for the lesser models?
Okay, so FSA realization is a realization basically that we fetch from the power producers or the priority sectors who bid for the Coal India stock, for that matter. Okay. And also, if you look at the discounted valuations right now that we have, the stock is currently trading around that 6 times kind of EV to EBITDA level. And if you compare that on a 2-year average or 5-year average basis, it still is at discount despite being an outperformer. So clearly, we also are looking at discounted valuation. Besides that, Neeraj, I'll also like to highlight the fact that most of the analysts on this counter covering the stock, almost 26 out of 33, 34, suggest a buy rating on this counter. So pretty bullish view coming on that counter.
Interesting. Okay, Nikki, thanks for putting this into perspective. So that's Coal India, and August month for Coal India in the month of August, and let's see if it lasts for the next series or the next month as well. The best August in what, 10, 11 years, right? That's quite stellar. The best year YTD performance as well in the last 4 years. That's something to speak for Coal India. Okay, the next two pieces from around the world. Firstly, Donald Trump has threatened to pull out of the World Trade Organization if it does not treat US more favorably. In an exclusive interview with Bloomberg, the US president also says he will give himself an A+ for his term at the White House. Here's Bloomberg News editor-in-chief John Minkelwaite in conversation with the others on the key takeaways from the Trump interviews.
Combative, confident. He sort of radiates a kind of confidence which not everyone is going to agree with, but he's got that sense that he thinks he's winning all the various battles across anything, and he still hasn't stopped thinking up new big ideas.
Yeah.
He's looking at things like the capital gains tax on indexation. He's looking at things. He was particularly bellicose, I thought, on Europe. He said that Europe was nearly as bad as China, and he's just rejected the offer on auto parts or on cars, which for the Europeans was a big deal.
Yeah, actually, I want you to stop there for a second, because we had not seen that, and frankly, there was a bump in the European auto stocks earlier today on the possibility of tariffs being removed. That's off the table now, you're saying?
He said that wasn't nearly enough, and that he wanted much more from Europe than that. So that wasn't a kind of starting chip. Again, I had the same impression that you did, that this was quite a big deal for the Europeans to offer it. But his response was, this wasn't enough.
Did you talk about his reaction on the markets? Because it's interesting, from the shot across the bows to China today, we did see the stock market fall. Is he aware of his interaction with the stock market? Did you get that sense that he feels he's sort of omnipotent in that way?
I think he sees himself as part of, he looks at the stock market as one indicator of how well he's doing. He's proud of the economy. I think he a little bit mystified by why he might get beaten in the midterms, given how well he sees the economy going. Obviously, outsiders might say that isn't wholly his achievement to have got that far. I think generally, you know, we asked him, for instance, about the fact that he keeps on bashing the main companies that are behind that huge surge in the markets. Joe and I have talked about this for years, but you look at Google, Facebook, Amazon, these are the very companies that are driving up the stock market. These are the ones which foreigners tend to be most envious of when they look at America, and yet they're ones that he seems to criticize most.
He said, I'm not sure the currency should be controlled by a politician. It sounds pretty sensible. Like, when I read his comments about the Fed, other than that, okay, maybe he's not a fan of the rate hikes, he seems perhaps pretty respectful of the concept of Fed independence, which was something that I think people were curious about, whether he would have that view.
I think he's got more respectful. You basically have a man who loves running everything, and it's rather irritating to him that he can't control this thing. But actually, in this case, I think you have to give him credit. He seems to have walked back a bit from that. He was making much more bellicose noises about the Fed earlier. You know, he talked a bit about being a businessman, that back then all he liked was low interest rates and a cheap currency, that he thought those were good, except when he was buying golf courses. And so that's his perspective, that's where he comes from. And he talks a bit, he did this in another interview, he talks a bit about wanting to be accommodated. But if you push him on that and say, you know, what do you mean by that? He doesn't want to step over the line. So I think I think to that extent, it looks as if the Fed has begun to win that battle.
So it seems as though Jay Powell's safe. John, he thinks he is safe as well. Talk a little bit more about how the fact you feel that you can't impeach a sitting president as it stands. Well,
no, I think he thinks it's very hard to impeach a successful president, which is how very much he views himself. Which he says he would give himself an A star, I think, in terms of his personal mark so far. So he doesn't. His point is that politically it's very difficult to do. On the midterms, he remains. He remains, I think, somewhat wary. But he thinks that if it was the midterms purely about him, he would do very well. You could argue about the rights and wrongs of that, but he thinks that he's doing very well with his base, that he's still got a kind of political clout there, even if that doesn't necessarily translate into him hanging on to the House in the midterms.
Well, that was Bloomberg exclusive. Another exclusive is about Warren Buffett. The veteran investor will keep buying stocks irrespective of where the markets stand right now. That's because he's sure that they will be worth quite a bit more in the next 10 years. In an exclusive interaction with Bloomberg Television, Buffett shares his investment mantras. Listen in.
The stock market is really on a record tear, I think it's fair to say. You've always drawn the distinction between price and value.
Right.
Are we seeing a run-up in value or in price?
Well, value gains from year to year. I mean, as companies retain earnings, stocks basically, if you own a business and you plow back a good portion of your earnings into building the business, you're going to have something more valuable on average year after year. Now, sometimes the market reflects it, and sometimes it's crashing for some other reason or whatever. But the stock market builds in value, underlying value from year to year. And it's grown a lot. I bought my first stock when the Dow was just under 100 when I was 11 years old, and look where it is now.
Well, look at where it is right now, because one of the things you take a look at to measure it is the total value of the stock market compared to GDP.
Right.
And if you look at that graph, it's at the high point. It's the highest it's been since the tech crash back in the late 90s, as a practical matter. Does that mean we're overextended? Is this a better time to be fearful rather than greedy?
I'm buying stocks, but I'm not buying them because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now. And I don't know whether they're going to go up or down tomorrow or next week or next month or next year. I do know they're good businesses. And in relation, you have to measure investments in relation to each other, and your alternative for most people is fixed income. And you get 3.02% or something like that for 30 years. So would you rather invest in a company that's earning 15 or 20% on their invested capital and compounding, or would you rather have a 3% bond which can never earn more than 3% while you own it?
At the same time, there are some stocks that are bargains, good bargains from your point of view. When the market's up this high, that means values have gone up quite a bit.
Yeah.
And you're sitting on a lot of cash, $110 billion. As a practical matter, don't we have to have more fear in the marketplace before you're really deploying a lot of that cash?
Well, I love it when there's, I don't love it for the country as a whole, but I mean, that creates prices that make me want to shovel out the money as fast as I can. But we've been shoveling out money anyway, and it's not as attractive as obviously when I was buying in 2008 and 2009, and that wasn't as attractive. 1974 was the best year for buying securities in my lifetime. That'll happen from time to time, but you can't sit around and wait for it. You're never going to catch the bottom anyway, and everybody will be terrified at that time. We keep buying as long as we find something that's attractive to us, an attractive business at a reasonable price. And I love it if it's a really juicy price, but I still keep buying.
Value at reasonable price, and Warren Buffett believes that relative to other investment options available, there is still value at a reasonable price. It may not be juicy, but it's a reasonable price, at least in the US stocks. Don't extrapolate this to world markets, really. It's different for different countries, but he's liking and continues to buy into the US stocks. Of course, they made an investment into India as well, which Warren Buffett himself was not associated with. Anyhow, that's all that we have on First Word today. Lots more lined up on Indian Open, though. We discuss business outlook for Mahindra CIE with Chairman Hemant Luthra. And then the ball is on government's court. It has 15 days to decide whether to direct RBI to exempt the power sector from stricter NPA norms. The Power Secretary, Ajay Kumar Bhalla, joins in as well. But after this break, it's a full tilt towards the day's trade.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are not different, they are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Aegon's of business never stop.
Aegon's of business never stop. Only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning to all. You're watching Indian Open right here on Bloomberg Quint. A quick glance at what's been happening across Asia. Today seems to be a slightly more tepid day of trade, with the Nikkei trading marginally lower, with the Shanghai and the Hang Seng trading with cuts of 0.5% to almost 1% on the back of the fact that as early as next week, you could see a plan to impose tariffs on another $200 billion worth of Chinese imports from the US. US itself saw a little bit of a slump in trade in yesterday's session, though you did see the S&P still holding ground about those 2,900 levels. For the SGX Nifty, which paints a different picture today, we're going to see an open on the back of that. That's about 0.25% or lower, 11,711 for the SGX Nifty. Yesterday was the end of the August series. Today we're going to have a new start to the September series. We've got Agam who's joining right now to tell us what levels we need to keep a track of and where F&O traders are actually building up bulk of the positions. Agam.
Sure. So we did see a lot of activity around the 11,700 mark yesterday. But let's start by taking a look at the Nifty futures. And as you can see, we did see about a drop around 0.1%. But of course, the September futures did see an increase, considering we are moving into a new series. It's the same for the Nifty banking, futures as well, where you've seen about a nearly 57% increase in open interest. Let's go ahead and take a look at the India VIX, and considering it was expiry, despite of that too, we actually saw it come off further by around 0.2% at around 12.4. And moving in, let's take a look at the Nifty put call ratio as well. That, of course, has also changed substantially, considering the expiry coming through, now at around 1.57 against 1.78. In terms of stocks that I'm watching out for, Sun Pharma on the gaining end, it was the top Nifty gainer yesterday. That advanced. We saw fresh longs building in across all series. And on the losing end of the spectrum, we saw Eicher Motors. That saw weakness of around 2%. NHPC was one of the other, curious ones which actually showed up on the list, and while it did decline by around 1%, we did see a surge in open interest in yesterday's day of trade. So I'm watching out for some of these names, and of course the benchmark index and how that reacts to the global cues that we're getting at this point in time.
All right, again, thanks very much for that. So watch out for those levels. Let's bring in an important voice then. We've got Rusmik, Senior Vice President and Head of Fundamental Research at Kotak Securities, who's joining in right now with his views on the market. Rusmik, thanks very much for taking out the time, and good morning to you. Let's start off with what's been happening on the index itself and the overall market mood and market setup right now. After this steep climb that we've seen on the Indian indices, looks like a period of consolidation could be on the anvil, or this, the spacey trend that we've seen is likely to continue?
Very good morning. We see that market is in a very strong grip as of now, in spite of all negative cues coming from the international markets. The expiry, has happened yesterday, and if you see the maximum open interest in the markets, it ranges from 11,500 to 12,000. Our reading is that we could have a little negative bias this month, because a couple of headwinds have come in from international side in terms of rising bond yields and rising interest rates. We expect that since Nifty is now getting into overbought zone, we expect some bit of correction in the market going forward. Key levels to watch for is 11,500 and 11,200 on the Nifty. Apart from that, a couple of numbers which will come out this month, we'll have to just wait and watch in terms of GDP numbers. though the base effect will play out and you will see robust numbers coming out throughout the month in September also because of last year's GST impact. So on an overall basis, we see market to be range bound with a negative bias going forward.
Rusmik, negative bias exists only for the next month, or do you believe because of all the Chinese US spat and the very points that you mentioned about rising yields, possibly higher rates, we could have a prolonged period of uncertainty? Also keeping in mind that there are these elections slated in India in the month of November.
Yeah, if you take a little midterm view from here till end of the year, I think so our bias will be slightly negative in the market, because if you look at the valuations also, we have now close to the previous peaks. A Nifty on the 1 year forward is trading at around close to 19 times, and the mid cap P on a 1 year forward basis is almost 21.5 times, slightly about 21.5 times. And I think we expect that crude will further, probably move up as we approach winter, and you have this nuclear sanctions on Iran also playing out in November. That could have a negative impact on our currency also, and we are seeing this negative bias across emerging markets because of weakening currencies and a strong dollar. If crude continues to further go up, our expectation that crude might go anywhere in the range of $80 to $90 per barrel somewhere in the last quarter of this calendar year. If that plays out, then probably we could have a slight correction in the market, and that's what keeps us on the back foot as far as broader indices are concerned. So rising crude prices, depreciating currencies, and possible overbought position in the Nifty, and coupled with high valuations, these are some of the factors which make us be on the back foot as far as markets are concerned in India.
Since you spoke about the currency, we've hit a fresh all-time low of 70.86 on intraday basis. Our closing was the lowest that we've seen in some time now. For currency-sensitive sectors, how would you approach them now?
So we still feel that there could be further depreciation of the INR against the USD going forward also, and to that extent we have a positive approach towards sectors like information technology, pharmaceuticals, textiles, and a few of the auto ancillary companies who have a decent exposure, like Bharat Forge and other companies who have decent exposure to US markets. If I have to dissect further, most of the large caps in the IT names have moved up substantially in this calendar year. So making extraordinary returns from there will be a little difficult. But to the extent, if you have another 4 to 5% currency depreciation, to that extent you could see another 4-5% depreciation in the IT stocks. The dark horse could be pharmaceutical sector, because both the domestic industry is also doing great as of now, and they could also benefit from exports to both US and Europe, because INR has gone into a fresh zone as far as INR versus Euro is also concerned. And coupled with that, a couple of textile companies predominantly who export to the US could also benefit along with auto ancillary companies.
Okay. Would you be able to tell us what's the pecking order on the auto ancs or the pharma space out at Kotak Securities, Rusmik?
We're still bullish on Bharat Forge. That's one of the topics, because the US shale business is also picking up, and the demand for class 4 truck is also picking up, and order books are full for most of the truck companies in the US. In pharmaceuticals, we would prefer a mix among the top 5. There's some steam left in Lupin, because another one quarter could be bad, but second half they are projecting should be better than the first half for Lupin. Dr. Reddy's, Aurobindo Pharma, these could be the companies to watch out for in the pharmaceutical space.
Okay. Rusmik, the other stock which is in focus today is Yes Bank. We want to talk about private banks at large too, but Yes Bank in particular. Now, how are you reading what's happened? Yes, Rana Kapoor will be continuing as the MD and CEO, but it is not for the full term, or at least as of now we don't know that. For now it's saying until further notice. We haven't quite seen something like this happen in the past, at least to my memory. How does this augur for Yes Bank as a stock as well?
We've seen quite a good rally in corporate lending banks, on the private side, like Axis Bank, Yes Bank, and ICICI Bank. And as you rightly said, there could be still some ambiguity and uncertainty relating to the full tenure of Mr. Rana Kapoor in Yes Bank. We are a little more positive on ICICI Bank in pecking order in the in the private sector banks, whereas corporate sector lending is concerned. We've seen capacity utilization improving quite smartly in the manufacturing sector. So a couple of quarters back we were at sub 70% utilization levels. Now the corporate utilization levels have gone up to around 74%, which means that maybe in the near future we could see a revival in corporate capex probably somewhere post elections next year, and that is one thing which could benefit a lot of corporate lenders. But I think Yes Bank still seems to be more on the corporate lending side as far as the three banks are concerned. We would still prefer ICICI Bank in the private sector space as far, because their retail book is quite strong, and almost more than 60% of the book today is retail, and the focus is retail. So to that extent, valuation re-rating could be more possible in case of ICICI Bank. Yes Bank is little expensive, or little expensively valued as compared to ICICI Bank today. So Yes Bank probably could range between 300 and 360. That could be the range for Yes Bank going forward. But there could be a little bit of further re-rating and possible uptick happening in ICICI Bank.
Yeah, but Rusmik, just a quick thought. I don't know. Do you have thoughts on this latest development overnight, and does it have any bearing on the stock?
It'll have a slightly negative bearing overall, because still clarity is not come in for the full tenure of 3 years. So that is one small overhang for the stock. But having said that, I think the bank has a very strong top level management. So to that extent, I think we should see a mixed reaction. Maybe it opens down and then again settles down. So it is somewhere in the mid range of our range. We're looking at between 300 360 for the stock. So a negative opening probably, but it should settle down somewhere closer to maybe yesterday's closing.
Rusmik, stay on. So much more to talk about. Let's get in our research team in the research huddle to talk about all the key stocks in news. We throw some light on the analyst meet that took place for a key auto ancillary stock. And then, of course, a nod for the merger for Idea Vodafone. Talk about that as well. Somit, Shraddha, as well as Yatin join in for that. Shraddha, let me start off with you first, the stocks in news.
Right, so Sodal Infra Resources is one counter that we're tracking. The board has approved infusion of funds to the tune of 210 crores via preferential allotment. This preferential issue will be made to Steadview Capital Mauritius and ABG Capital. Preferential issue price is 539 per share. That's a 5 or 6% discount to yesterday's closing price. ICICI Bank, of course, has voted in favor of appointing Chanda Kochar on board of ICICI Securities. Dilip Bilkon has received LOA for EPC project worth about 1700 crores, and PNC Infra has been declared as the L1 for EPC project worth about 2000 crores. So both these entities have received these projects from the same government entity, but they are different packages. HCC owned Lavasa Corp has been admitted under the insolvency resolution process, negative for the company. The government, according to a Times of India report, has ordered a formal inspection of Jet Airways accounts, and they've said that they will examine it if for any siphoning of funds in the airline. So troubles continue for this one. And finally, Care Ratings is another one where investor Monish Pabrai's Pabrai Investment Fund and Dhandho India funds have hiked their stake in the company by 2.4%, and their stake now is at about 7.5%. So possibly some reaction in Care Ratings.
Yeah, you're right. I mean, typically Monish Pabrai's name getting associated, stocks do react. A couple of things have gone awry as well in the recent past, but let's wait and watch. So lots of stocks to monitor. Well, what about the telcos?
So they have received Idea and Vodafone now. They have received their final approval from the NCLT. Now, this was the final approval required by both the entities, and they were expecting this final approval to come in by the second half of August. So there's no surprises on that front. However, this approval does not mean that the merger is complete. Final merger could still take time because both the parties still need to integrate their operations, and that will be the key thing to watch out for, because the cost benefits will depend on when the final merger is completed. Now, the merged entity will be India's largest telecom operator, given by revenue market share and subscriber base. The revenue market share of the combined entity is expected to be around 35%, while the subscriber base of the combined entity is close to 44 crore subscribers. Now, JP Morgan, which has an underweight rating on Idea Cellular, says that the post-merger math now does not look that attractive. It will only look good if there is some revenue recovery seen by both the combined entities, and it also says that even if the operational and capital expenditure of the combined entity come down, if RJO's aggressive pricing strategy could undermine these benefits. So we'll have to see how the stock now pans out, on how the final how much time the combined entity still takes to get the final merger complete.
Yeah, well, the stock's under serious pressure in the last few days. Let's wait and watch what happens. Thanks a lot for that. What is not under pressure, though, is Bosch, and we were wondering in the last few days as to what could be possible reasons. How was the analyst meet?
Neeraj, we had the company which has uploaded the investor presentation, and the annual report is also out. Clearly, the shares are up nearly 16% post that, and the market was guessing as to what exactly happened. But the investor presentation probably presented a fair picture of what the company intends to do. Now, if you look at the key takeaways from the investor presentation, we have the emphasis on transition from BS4 to BS6, and that will clearly mean improved demand for the company. Apart from that, electrification and electric vehicles is something that Bosch is betting upon. They already have started rolling out products for the electrification of cars, so that is something important that we'll be watching out for. This is one of the first auto ancillaries which have started production of electrification auto ancillaries. Apart from that, they also are looking at providing smart solutions for cars, and they have already established plants in Nashik for that. And they have achieved a breakthrough, which is basically Bosch's parent has been able to do a breakthrough in the diesel technology, wherein they are been able to reduce the emission significantly when it comes to the diesel cars. And finally, we have the power tool segment, which has achieved 100% growth in terms of channel expansion in tier 3 and tier 4 markets on a yearly basis. So that is something encouraging. So from electric cars to probably better emission devices, which the of course parent will supply to the company here, which would mean enhanced revenues at least for the diesel car portfolio, and especially when India is transitioning from the BS4 norms to BS6 norms.
Right, great. Thanks a lot for that, Yatin, so for putting that into perspective. Rusmik, we were just talking about auto ancillaries. You mentioned Bharat Forge as amongst the ideas that you like the most. What about Bosch? Is it a good investment candidate?
Bosch has seen quite a bit up move and re-rating in the last couple of days. Especially yesterday was a good day for the stock. Going forward, probably it could go up another 10%, but it will have a little bit overhang on valuations coming closer to 23,000-24,000 rupees. So from the low levels, I think so that was it was an underdog. No one was looking at that stock at 16,000-17,000. But now, post this analyst meet, quite of attention is drawn towards that. And as everyone knows, Bosch is far ahead in terms of technology when it comes to change and building technologies for the future. So to that extent, outlook for Bosch is good as far as domestic market is concerned. But maybe from a currency benefit, I think Bharat Forge could be a better bet over there.
Since we were talking about the elevated crude pricing, anything that you have in particular in mind for what the reactions could be within the oil and gas space, separately for the likes of Reliance and ONGC and the oil marketing basket as a whole, which has been reeling under pressure this entire year? Reliance Industries, though, the sole hero in the pack, which is led from the front, taken the index to these levels at which it is at, but over the last few trading sessions, some bit of hesitance has been coming back, profit taking off the table. Do you see that continuing?
We expect some more profit taking happening in especially in Reliance, because it had a very swift move from 1,000 rupees to 1,300. So some bit of re-rating which was pending is already happened in the stock. But amongst all the oil and gas companies, Reliance still is far better off than the oil marketing PSUs, because the impact of rising crude prices will still be a hangover for most of the oil marketing companies like HPCL, BPCL, IOC, though they might do better on the refining side. So the plus for Reliance is they get better off in petrochemicals and refining. To that extent, they're least impacted on account of rising crude prices. As we approach winter, and we'll also have elections coming around the corner in India. Given these two things, probably we feel that the oil marketing PSU companies will still be under pressure, and prices could remain subdued for at least couple of months till the time we don't see a breakdown of crude below $70 a barrel. There could be headwinds for the sector, and particularly for oil and marketing PSU companies.
All right, Rusmik, just stay on with us. Time to get in our technical guest and give us some levels to watch out for. Ruchit Jain, technical analyst at Angel Broking, is joining us on the show right now. Ruchit, thanks very much for taking out the time. Let's start off with the index now. We've ended the August series on a positive note. We've got the index already, breaching that 11,700 mark. Now, new build up around 11,800. Do you see the breach of that?
Yes, hi, very good morning. Well, if we see, then the broader trend for the markets is still positive. The high top, high bottom structure that has been seen in the indices post the breakout in mid-July, that is still being continued. And in the recent past also, whenever minor declines have also come, traders have used those declines as buying opportunity. I think similarly is the case at current price juncture also. There are no signs of reversal in spite of the consolidation that we have seen in last couple of trading sessions. So yes, the signs are positive. Even on the derivatives front, if we see, then the rollovers are much in line with what has happened in last 3 months of average, and also much of the long positions that were held on has been rolled in the coming September series. So I think on the higher side, we should see breach of 11,800 in this series. Although in terms of open interest, if we see, highest OI is built up at 11,800 and 12,000 call options. So once 11,800 is breached, I think we should head higher towards at least towards 11,900. Now technically, whenever markets usually trade at its all-time high levels, we take out reciprocal retracement of previous corrections for next target projections. And as per reciprocal retracement theory, also 11,900 I believe should be seen in very short term. So at current juncture, one should create long positions in Nifty index at current price for higher target projections beyond 11,800. Even in banking front, we are of the opinion that this side consolidation phase, which has been seen in last 3 weeks, should be used as a buying opportunity now, because in last few weeks, we have not seen the index, Bank Nifty index, breaching the breaching its 20 days exponential moving average on the daily charts. So we think that this up move now should be there in Bank Nifty index too. At least 28,400, which is the higher of the consolidation phase, should be seen in next few trading sessions itself. So in case if we open marginally lower today, which is as per the indication of SGX Nifty, one should create long positions on Bank Nifty as well for target around 28,400.
All right, that's on Bank Nifty. We've got Rahul Shah, Vice President for Equity Advisory Group at Motilal Oswal Securities, also joining in on the show. Rahul, good morning to you. I want to quickly go across to your Nifty strategy, which is also on the long side. You're advising a buy on the 11,800 call.
Hi, good morning. I think what we've seen in last entire series, that one thing was very clear, that I think the large cap heavyweights on the Nifty sides have been performing quite well, and I think this is going to get more larger in this series, and we've seen the participation across the sectors and a lot of stocks participating in this rally. So earlier 5-6 Nifty heavyweights contributed, and now it's getting more into better. So my sense is that technically also the Nifty's got a support at 11,580, which is the major support which I feel at from the current levels. So that can be a major hurdle in case unless the longs unwinding happens at then only I think 11,580 has to be precisely broken. So my sense is one can go long on 11,800 call, which closed around 102 or 3 or yesterday, or maybe can open softer today. So with a stop loss of 85 and target of 135, one should go long.
Okay. Before we get in specific strategies, let's get in Jayesh Khilnani with a special segment, Bloomberg Edge. But he tells us about a pattern that the Bloomberg terminal has thrown up on a stock. And Jayesh, Balakrishna Industries today.
That's right, Neeraj. That's because the stock maybe has run up ahead of itself and the analyst expectations as well, because the target price is about 4.5% lower from where the current price is. And as of yesterday's close, there is an interesting chart pattern that has been formed, which is the bearish engulfing pattern. I'll get to the chart in a bit, but first let's have a look at the bearish engulfing and how the pattern actually works. Firstly, it should be formed at the top of a trend, which it has. So it's a two candle pattern that you have to watch out for, where the first candle has to be a bullish candle, which is followed by a bearish candle, and the second candle's body should completely engulf the first one. The bearish candle should be bigger than the bullish one. Essentially, that is what we mean. And longer the body of the second candle or the bearish one, greater the chance or the evidence of a particular top. Once all of these conditions are satisfied, it means that there is a bearish engulfing at play. Now let's first have a look at the chart of Balakrishna Industries and focus on the last two candles that we have. So you have a green candle, which is a smaller one. You see that the price could not sustain at higher levels and it closed below. And the immediate next red candle, which was yesterday's candle, that has in fact engulfed the entire body of the green one, and you can see that this is substantially bigger than the previous one, which means that this is a bearish engulfing and there could be further downside to Balakrishna Industries.
Okay, and the efficacy of this indicator?
Neeraj, works pretty well in the last 1 year. A total of 8 times this pattern has been formed, 6 out of which have been profitable, and average of about 5% on each trade.
Jayesh, thanks very much for that. Balakrishna Industries, watch out for that one. Bearish engulfing pattern on that. Let's take some stock ideas from our technical guest. Ruchit, let's start off with your ideas. What are you suggesting today?
A couple of buy recommendations. The first one is a buy call in CESC. Recently, we have seen that the stock has shown a sharp up move from the levels of 900 to 1000, 1005. Then a consolidation phase of during last week. So this has led to formation of a bullish flag pattern, which is technically a bullish continuation pattern. So one can go long at CESC according to the pattern at current levels, keeping a stop below 978, expecting target around 1075 in short term. And my second pick is a buy call in OBC. We think that particularly the PSU banking names, and especially the mid and small size PSU banking names in the next few trading sessions itself should show good momentum. Because if we see yesterday's trading session, then many of the stocks outperformed the broader indices from mid-size PSU names, and the volumes were quite high, which we usually see on a daily basis. So I think in this series, PSU banking stocks could be there in momentum. So OBC is one of the stocks which has given a breakout from after a consolidation phase in yesterday's trading session. The breakout has been supported by very good volumes. So one can go long on OBC with stop below 79, expecting target around 94.
Rahul, what about your stock ideas?
I think, Neeraj, I think 2 stock ideas. I think one is importantly what we saw star performer in last series was ICICI Bank. So I think this can still go higher from here, and we've seen the good longs position built up as well as technical record as well in the stock. So I think the risk to reward could be quite favorable in ICICI Bank. So I would go long on ICICI Bank with a stop loss of 337 and target of 360. Second idea is from the metal pack JSW Steel. So we've seen JSW Steel roaring up in the last few sessions post entering into a Nifty's. So I think basically entire metal pack has done quite well in last 4-5 sessions. So I think this has been leading the rally since quite long. So I feel that this can still go higher with a stop loss of 388 and target of 425. I'll go long on JSW Steel.
All right, so some stock ideas. I just want to focus a little more on what's been happening in terms of the pharma pack, and particularly 2 stocks within the large cap space, Neeraj, and within the mid cap space that is garnering a lot of attention of late. If you can quickly go across, we'll tell you what's been the favorite, what's been in pink of health rather from the large cap space. So it's been a stock like Biocon, which has actually really created a big gap in terms of the price diversions within the large cap pharma pack. So if you take a look at the price performance, you've got got a good 76% up move on a one-year basis for a Biocon versus the others like a Lupin, which has been down 10%, a Sun Pharma, which has been down 8%, and a Dr. Reddy's, which has probably given you a return of about 16%. Now, Biocon, obviously, good set of numbers came in for the quarter, 47% increase in profit, but their biosimilars business is something that's really garnering a lot of interest. They are hoping that they can clock in revenues of about $200 million from the emerging markets versus 120 million which they currently clock in. So a lot working in favor of Biocon and their biosimilars business versus the others, where you are seeing some pressures. You remember Dr. Reddy's and Lupin, they've got some warning letters from the US FDA, so some pressure building up there, and the others like Cadil are probably down about 23%. From the mid-cap pharma pack, if you've seen a Suven Life Sciences, a clear winner there on a yearly basis, and the kind of performance that you've seen on this one. Last few days, obviously, some amount of profit taking has been happening on Suven Life Sciences, but they did win that product and process patent from China and Eurasia, which has led to the slight bit of bump up that you're seeing. On a year basis, Suven Life Sciences is actually much more. I think this is a year basis. On a YTD basis, the stock has done significantly better compared to its peers like a Strides, a Marksons, a Najanta Pharma. But in terms of the kind of PE multiples that you're seeing, it is slightly more expensive compared to some of its peers as well. Just a quick word from you, Rusmik, on the stock different performances within the large cap and the mid cap pharma.
The mid-cap pharma have done better than the large-cap pharma because most of the smaller names don't have so much issues with US FDA and the pricing pressure which is there, and most of the mid-caps have little unique business models. Each of the company has its own specialty, like Divi's and Dishman are more into CRAMS, Suven is more into research and CRAMS. So going forward, I think so the large caps maybe because of their low base and beaten down nature have a higher probability of giving better returns in the next 6 to 12 months as compared to the mid cap pharma names. That's what our internal view is. But within the mid cap space, we like Dishman Pharma. Unique business model and scalability could be very high going forward on the CRAMS page, both in their Swiss facility as well as in their Indian facilities. So that's one company to watch out for in the mid-cap pharma space.
Rusmik, I don't know how closely you guys track aviation as a pack, but yesterday Interglobe Aviation at 932 multi-month lows. We all know the story with Jet Airways, and now there is talks of how their books might be open up for checking whether there's siphoning of funds, etc. SpiceJet has been out of news per se, but again, the performance because of crude uptake hasn't been quite spectacular. Does it put into question mark what people believe would be a secular growth story because of the month-on-month growth numbers on the passenger traffic?
So this is one sector which actually excites on the volume growth front because they've been the volume growth in the aviation on a month-on-month basis has been very strong, and consistently it sustains those numbers in terms of growth. But we would still expect these companies to reel under pressure because of the raw material cost. You know, our expectation is that that crude should further strengthen from here. And if you go with our thesis of crude going up further, probably that could lead to lower margins for most of the companies. And to that extent, then valuations also look expensive, which was looking very attractive 6 months down the line, 6 months ago. So from a 3 to 6 months perspective, we still feel that companies could be under pressure on account of very high cost, and to that extent, we still remain a little negative on most of the aviation stocks, including Interglobe.
Rahul? No. Any of the aviation stocks?
No, I think still isn't. I would still avoid aviation. I think we've seen obviously Jet, what has happened. Again, Interglobe also, we've been seeing sell-off since a couple of series. So I think still the strength, I think the entire sector looks very weak upon it. So I don't think so. There's at least definitely a long, definitely I'll avoid longs in it. Shorts, yes, I would wait a little bit for maybe I think Interglobe below 890, I would go short on Interglobe as well.
It's interesting that how everybody was bullish on aviation and was citing the long queues at maybe a Kanpur or a Lucknow airport and saying that the passenger traffic would continue. It probably still does, but that uptick in crude prices clearly putting paid any kind of hopes that people had. SpiceJet from 150 to 78, Interglobe from 1550 or thereabouts to what, 932. Jet Airways, well, everybody knows the story. It's been, it was a wealth creator, yes, late 2017, but calendar year 18 has been terrible for them.
Well, not necessarily that everything that comes cheap has value in it. So even at these prices, you may not want to enter.
Yeah, true. Well, 14 seconds left for the pre-open session to kick in, and looks like we'll have a flattish start at our hand, Devina.
Well, yeah, that's the Asian market pack for you. Mixed bag right now for the SGX Nifty. We're down about 0.2%, 22-point dip, and that's market pre-open on your screen. So we've got the Nifty as well as the Sensex, a slight divergent move that's coming in, but nonetheless, let's take a look at what's been happening on individual movers. So you've got the likes of Yes Bank, which is dipped about 10% that will stabilize. Power Grid is down 2.5%. Vedanta has moved lower by about 2%. BPCL, Adani Ports and Lupin losing anywhere between 1 to 1.5% apiece. Infosys at 1400. Reliance Industries, another day of at least the pre-open tick suggesting a slight down dip day. Hero MotoCorp 3200. Grasim, Vedanta. Bajaj Finserv at 6,920. These are some of the losers there. So you've got an even Steven there out there in terms of the breadth on the index. NTPC is one of the bigger gainers, which is up 2.4%. Power Grid is up 1.5%. ONGC has moved up 1.4%. Dr. Reddy's, Bharti Infratel, and Eicher Motors is doing okay for itself, up about 0.6%.
Well, stocks in news, and we haven't discussed, I think we'll discuss HCC and the others with Rusmik in just moments from now, or maybe ask him about the top calls from the morning meeting. But HCC is starting off 10% lower, and not surprised there. Stock firmly in news, and do watch out. By the way, the currency is open at 71. That probably remains one top draw as well, 70.94 now, but 71 or thereabouts is where the rupee is at. We were talking about the currency and the impact on sensitive sectors in just moments from now, but record lows yet again. The bond yield should come up on your screen, and let's see what's happening there as well. This is more an EM-led sell-off as opposed to it purely being only an India-specific problem. Keep that at the back of your mind. Look at what's happened to the Argentinian peso or the Turkish lira and some of the others. So a bit of a impact out there, but 71 the rupee to the dollar. What else? Yes Bank looks like it'll start off about 3 or 4% lower. So that will not necessarily have a good day. BPCL looks like starting off marginally lower. Do watch out for that. And on the gaining side, I don't know if Idea will have a 9% uptick or no, but for now, the first 1 minute is showing that 8.5% uptick. ITI continues from where it left off yesterday, up about 18% yesterday, up another 9% in the session today. So that's having a fairly decent outing. And Bosch continues about a couple of percentage points higher in the first 1 minute. Let's see if that lasts or no. Before we move any further, Sumit Sarkar Johnson with the top brokerage calls for the morning. Sumit.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is Bank of America Merrill Lynch on Dr. Reddy's. Now, the brokerage has maintained its buy rating on the stock, but has raised the target price to 2,900 from 2,475, which suggests a potential upside of nearly 22%. Now, according to the brokerage, Dr. Reddy has deep product pipeline in the US market, not only in the complex generics but also in the specialty segment. Now, on the back of this, the product pipeline, the brokerage expects the comfortable 8% growth in the US market for the company over FY18 to FY22. It also says that FY20 will largely be the inflection point for the company. Now, specialty segment of the company will take a bigger role in the US market, as it expects the specialty mix in the US sales to increase from 5% in financial year 2018 to close to 18% in financial year 2022. Lastly, it says that there are many near-term catalysts for Dr. Reddy, like the facility clearance filing of complex LAI and DFN 15 for the company. Second we have is UBS on Sun Pharma. Now, the brokerage has maintained its buy rating on the stock, but has raised the target price to 740 from 640, which suggests a potential upside of nearly 16%. Now, Sun Pharma was early among Indian pharma companies to push forward with a branded portfolio. Now, Sun Pharma has around 10 branded products, of which 3 are currently in the market, while 4 are likely to be launched in the next 12 to 15 months. Now, on the back of these new launches, the brokerage sees potential earnings upgrade even if one of the brands does well in the US market. Along with this, it also expects Sun to benefit from the recovery in generics, largely driven by resolution of the Halol warning letter and ramp up in the specialty segment.
Thanks a lot for that, Sumit. Appreciate your time. Rusmik, before we let you go, do any of the telcos, Idea in particular, or maybe a Bharti Airtel, provide room for an investment opportunity?
We don't see an investment opportunity. They could be tactical plays because of the way they have been beaten down. So Idea can pull back to around, say, 60-65 levels. But still the thesis of disruption and negative cash flows and losses will continue for the companies, at least in the near future. So we don't see companies going back to good profitable levels from here on. So they will still be trading bets. Whenever they get oversold, probably you'll see them pull back. So Idea, I think there is room for it to pull back to around anywhere between 58 to 65 levels. That's the upside we're seeing. And Bharti, we still have a little positive bias as far as between Idea and Bharti. If you consider Bharti is much more better positioned because there could be more triggers for them, especially from their some corporate action happening on their South African business. So they have some levers to probably handle and reduce the balance sheet strain which they have as of now. But in case of Idea and Vodafone Idea merger is going to take some more time. In between, there could be pressure on margins and losses could continue. So they will have to keep on finding ways of how to fund the losses and the expansion plans. And between Reliance and Bharti and Idea, if you see, in terms of 4G coverage, Idea and Vodafone are slightly weaker as compared to Reliance Jio and Bharti. So to that extent, they could face some bit of constraints going forward when they have to expand their user base, especially on the 4G space.
All right. Rusmik, thanks very much for joining in. Really appreciate your views on the show and your time. So that's Rusmik Koza there with his views on a lot of things market related, stocks, the index as a whole. But let's focus on one pack, and that's the auto companies. They will start coming out with their monthly sales numbers tomorrow, and analysts are also betting on commercial vehicles to keep the overall numbers higher, much like what a dealer's survey had suggested. Yatin Mota, he's here with a poll of 3 different brokerage houses suggesting the same. Yatin, take it away.
Good morning, Devina. Of course, as you were mentioning, commercial vehicles, the momentum is expected to continue. Of course, there was some confusion regarding overloading norms and, before that we had the emission norms. But despite all of those challenges, we have seen that the commercial vehicle demand remains strong. In fact, if you look at Ashok Leyland, we are expecting a 15% growth for the August sales. And similar is the case with Tata Motors, wherein we are expecting a 21% growth. Of course, for Tata Motors, the passenger vehicle part will also keep the momentum on. For the two-wheeler space, Bajaj Auto, a 24% growth, largely on the back of strong domestic motorcycle sales, and the export markets also have been quite buoyant for the company, apart from rising three-wheeler sales. Royal Enfield, the growth expected to be close to 10%, slightly muted versus the previous months, given the fact that Kerala as a state has been quite strong for Eicher Motors in terms of sales, and the flood situation there clearly would be impacting sales. Not only that, we also have Maruti Suzuki, wherein the sales will be impacted because of the Kerala issue. So we're expecting a 5% growth for Maruti Suzuki, sales seen at close to 1.72 lakh units. For Mahindra & Mahindra, the automotive segment, we are expecting a 15% growth there. And for the tractor segment, a strong 24% growth is what the poll is throwing up as a number. And finally, we have TVS Motors, again from the two-wheeler pack, wherein the expectation of growth is 6.6%. Of course, here the moped sales have been falling. However, this will be compensated by the performance in the export markets, plus the new launches and the scooter segment that they have. So on an overall basis, expect healthy growth for the automakers this time. We could see some slowdown in two-wheelers because of higher base as well as the Kerala issue.
Thanks very much for that. We'll keep an eye out on all those numbers. Ruchit, just want to come to you. Actually, Rahul, I'll come to you with this one. Anything that you're seeing, particularly in terms of a visible trade on the likes of a Hero MotoCorp, a Bajaj Auto, a Maruti, or even the smaller players in the auto pack?
I think interestingly, we've been seeing a sideways to a negative momentum in most of the auto pack. So I think if you take the large cap names like Maruti or Hero or Bajaj, so they're very typically sideways to a negative. But I think Maruti could be a trade. We saw some kind of sell-off yesterday. So I think Maruti, I think at 9100s or odd. So I would bet it on buying or from that level. And it can again hit 9450, 9500 or so.
Stay on, gentlemen. And Deepak Jasani also with us. We'll get to him in just moments from now. But Anand Bagri, he's domestic market head at RBL Bank, joins us right now on the show for a very quick perspective on the currency as well. Remember, he shared his views, and I believe, if I remember correctly, he didn't think that there was too much of further downside possibility. Anand, am I correct? There is 71 on the tick right now. But does it look very vulnerable in light of what's happening to the Argentinian peso or the Turkish lira or other EM currencies?
So I think all the EM currencies are very vulnerable at this point of time, and I continue to believe that it's poised to reach the 72 levels perhaps. But I think on the charts, the dollar is quite overbought in monthly, weekly or daily, whatever charts you look at. So possibly we could see some retracement at these levels, maybe 15-20 paise. It could go up by around 10-15 paise more, and possibly we could see some retracement, some aggressive selling by the RBI, and possibly that could be a temporary top at these levels.
Do these levels still create a little bit of panic, or it's probably the natural progression considering what the emerging market currencies are doing, and they will come to settle at a point? And in that case, is RBI intervention at this point probably likely, according to you?
The RBI intervention has been there, but I don't think it's on a large scale. So I believe they are just stemming the overnight volatility which is there, the intraday volatilities which are there in the market. Otherwise, it's mostly in natural progression with whatever is happening to the other EM currencies. But this builds a strong case for a rate hike maybe in the next policy. We could see a 50 basis point rate hike going forward.
Anand, we'll leave it at that. Thanks so much for taking the time out and giving us that quick perspective. That's the view on the currency, 71 to the dollar. Well, maybe an intermediate top in the offing. Let's wait and watch if that happens or not. Deepak Jasani, Head of Retail Research at HDFC Securities, with us on the show as well. Deepak, good morning. Thanks so much for waiting by patiently. Good having you today. How are you? Let me, just 5 minutes away from market open, Deepak, we'll take your markets view in a bit. First, 2 or 3 names that are standing out right now. Firstly, Yes Bank starts off 5% lower, or likely to start off 5% lower. You reckon this development that has happened, which is temporary in nature, could put in further pressure to a stock which has already corrected 10% in the last 2 weeks?
Good morning. Yeah, quite likely there is nervousness about the continuation of the current MD. But I think if this continues a little more, then probably it will give a trading idea or a trading opportunity for traders. Because ultimately this will be resolved in one way or the other, and even if the current MD does not continue, the bank will have a new MD. I think the markets is not going to take that very negatively, and if he continues, then all the better. I think it will give a trading opportunity for most traders.
Okay, just want to highlight a few stocks. Right now you've got an idea which is up about 5%. In pre-open. GSK Pharma is doing okay, 1% higher. You've got the likes of Cadila, which is up 0.5%, and in ABB India, which is up 0.5%. Anything else, Ruchit, according to you, that's catching the eye currently?
I think in the pre-opening session, many of the pharma names are showing a gap up opening. So that may be due to that INR around 70.95 that we are seeing. I think in intraday session, one should focus on pharma names, specifically names such as Glenmark Pharma and Wockhardt. These are the 2 names from the pharma pack. I think we should see positive momentum today.
Ruchit, would you trade Yes Bank?
Not really, because already the stock is showing a gap down opening, and the 200-day moving average is placed around 334. So I think no, it's not a fresh trade as of now, but any short positions if traders have, then they should look to cover it around 334.
Rahul, morning meet, did it address Reliance Industries the last 2 or 3 sessions slightly off? Is there an opportunity here?
No, we don't aggressively cover Reliance Industries, so there's no discussion on Reliance Industries.
Oil marketing companies, Rahul?
Yes, oil marketing we did discuss in last 2-3 days. Obviously, the crude has been spoiling, and obviously the rupee dollar. So I think in near term this challenge remains. But I think for a positional traders, we believe that it might be that oil will be cooling down in some time. So maybe after for that, one can look at for a longer term investment, HPCL and BPCL. Those are the two topics what we've been recommending to clients.
Rahul, anything within the likes of real estate or infrastructure? Because last few days you've seen a stock like HDFC buzzing a lot. DLF has also done okay for itself, and a stock like HCC. Would you have a call on that one?
No, we don't cover HCC as a house, but I think as a real estate, we saw a good amount of buying and a lot of stocks like DLF, Shobha, Indiabull Real Estate. We saw some spike coming up. So I think amongst that, I think Shobha is one what we've been liking. So I think the recent correction augurs well in terms of the entire pack. So I think Shobha we can look at buying from the current levels.
Okay, top calls quickly. Ruchit.
I would recommend buying Wokhart for intraday today, keeping a stock below 655 and expect target somewhere around 695 to 700.
Rahul, your top call?
SW still, I'll stick to that. I think 425 is easily achievable.
Okay, Rahul, lovely having you. Thanks so much for joining in. Ruchit, stay on. Some more to talk about. The market starting off very, very flat. The Nifty Bank about 0.5% lower. The mid caps and the small caps should also come up on your screen. I reckon there could be some bit of, actually, I thought they could start off in the red, but no, a flattish start, marginally in the green. Not bad for the small cap space. Let's wait and watch if this lasts or no. The heat map. And Yes Bank should be at the bottom of the pile. Yes, indeed, 4.5% lower. Reliance for the third day on a trot now is under pressure, 1.5% lower for Reliance Industries as well. And all marketing companies in the pre-open session were showing some weakness. Right now, BPCL about 1% lower, IOC about 0.5% lower. But it's even Stevens, if you can see between the red and the green, not too much of a difference. That once the two stocks which matter on the downside are Yes Bank and Reliance Industries. On the upside, some strength for ONGC. Dr. Reddy's, there is a price upgrade from Bank of America Merrill Lynch. That stock starts off higher. Sun Pharma is marginally higher. Maybe IT and Pharma could well be the defensives of sorts for the day today. But all in all, a flattish start for both the large caps and the mid caps. The Nifty Bank too, while started off about 0.5% lower, is now about 0.25% lower. Quickly, the top 2 or 3 newsmakers or trenders that I want to spot before I hand it over to Devina for what's happening across the board. The NCLT nod for merger coming in for Idea. Stock starts off about 5% higher in trade. Not the 8-9% move that the pre-open session, the first few minutes were suggesting, but higher nevertheless. Couple of other pockets. Firstly, the stocks which are in news today. Dilip Bilkon, a large order win, 1.5% higher. PNC Infra, 1,900 crore order win, and that stock starts off 7% higher. And HCC starts off about 5% lower on obvious news as well. So the infrastructure stocks firmly in focus. Last but not the least, I was talking about the brokerage note. Dr. Reddy's, the Bank of America Merrill Lynch target price has been raised to 2,900 from 2,450 odd, and that stock starts off marginally higher in trade. What are you spotting, Devina?
Well, aside from the ones that you already pointed out, you've got the likes of a Jet Airways, which is down about 1.9%, and Greaves Cotton, which was up in yesterday's session quite smartly, is now giving up 1.3%. You've got a Chambal Fertilizers down 1%. The entire PSU banking pack, which yesterday's opening had seen a sharp uptick, seems to be giving back today as well. So about a 1% cut on Dena Bank, UCO Bank, Andhra Bank, they're all losing. Vijaya Bank is down about 0.5%. Allahabad Bank's also down about 0.5%. United Breweries is down 0.5%. Berger Paints gives back in today's session. You've got Sterlite Tech, which is at 355. The likes of Chennai Petro at 310, which is down about 0.33% or so. Amongst the gainers, you've got the likes of a Tata Coffee, or you've got Marksans Pharma, that's up about 1%. You've got Capital First, which is up about 0.7%. Hexaware trading in the green, 436 on the stock. And you've got Tata, I already spoke about Tata Coffee, but HDIL at 30, that's gained ground by about 0.75%. Just Dial is doing well for itself, and TTK Prestige is up about 0.6%. Remember, TTK Prestige's target that came on this one was 7,725. It's already at 7,289.
Well, interesting start to the trading day. Lots of stocks in focus. JP Power, interestingly, is up about 15%. I think they've already marked it, but just mentioning that one stock which is trading very well, and ITI a couple of percentage points higher. Not too many stocks at the 52-week high list as well. Anyways, we have our guest still with us. Deepak Jasani is still with us. Deepak, What's been the advice that you are giving to your clients on Reliance Industries? Big runaway move for the better part of the year. The last 2 or 3 days has seen some profit booking. Does it provide an investment opportunity at a particular valuation level? It might be at the current valuations, or it might be a few percentage points lower. But does it provide that, or is it a good buy at any levels?
Yeah, we have been recommending traders to get into Reliance once it crossed 1020, and then it has given a decent upside. Now, after a 7 or 8 day up run, it has started a correction. So now I think we will allow the stock to sort of settle down, watch it for a few more sessions. Ideally, the earlier level of 1020, 1050, I think we will evaluate whether we need to re-enter at those levels or not. Now, fundamentally, the stock may not be very attractive from a EV to EBITDA or other perspectives, but I think on a relative re-rating, the stock, if the market continues to do well, the stock has more upside left going forward.
Deepak, good morning. Devina here. Just like you to come in on the banks and the PSU lot right now. There's been a lot of volatile trading days that we've been seeing. So jagged moves. One day you've seen most of them up 4%. The other day they're all giving back about 2 to 2.5% apiece. What's the sense here? Do you stay off from PSUs?
Hello.
Deepak, can you hear me?
Hello. Yeah. What was the question? Can you repeat?
I was asking about PSU banks and your call on there.
PSU banks over the last few days have shown some sort of upward movement. Now that again we would treat it as a trading opportunity. Fundamentally, the situation, the NCLT situation is panning out well so far. But I think there could be new pockets of slippages in terms of SME or agri. So we'll have to sort of evaluate as to how much more pain is left in the PSU sector. Further, we also felt that the consolidation of PSU banks, compensation structure and the independence, corporate governance needs to change. Now that will happen only after the new government comes in place. So for investment purposes, I think you can wait till the elections are announced. And in the meanwhile, I think there is a trading opportunity in the near term.
The other stock that you could probably talk about is a Bharti Airtel. CLSA has maintained its buy call and given a target price of 500 for this one. That's a potential upside of 31% on a Bharti Airtel. They're talking about how content is key beyond tariffs to defend market share for Bharti Airtel, though obviously the subscriber numbers this time around were not very encouraging. But Deepak, Bharti Airtel for you?
Now, telecom as a space will not build you wealth over time. That is what we continue to maintain. Now, yesterday, Idea got approval for the merger. So now that has become a bit stronger. Bharti and Idea both will sort of survive and prosper a little. But I think for that, the ARPUs across the sector have to rise. Now that will depend on the big brother, the new entrant, how far and how soon it will allow the ARPUs across the sector to rise. Till that time, the companies have a lot of spend pending in terms of capex, in terms of spectrum freeze, 5G auction, etc., etc. So in such a situation, I think this sector is not an investment-worthy sector at this point. You can keep trading it.
Okay. Would you consider, some of the consumption stories a play right now, considering that there are talks of how price increases could be taken by the likes of HUL, and the fact that the next few quarters could maybe see a volume increment for the likes of an ITC to about 2 to 3%?
Yeah, consumption is a decent theme. However, here we would like to mention as to the valuations of all these FMCG stocks are not cheap. They are quite high at this point of time, but at the same time, they are currently seen as a defensive play. They may not fall much in case there is a sell-off or a correction in the markets. So whether you want to stay with the herd and continue to buy into FMCG at these valuations, or whether you would like to wait and wait for a margin of safety in these stocks. So it will depend on each investor's preference.
Okay. What are you liking and what do you find risky in the current market setup?
See, broadly, the valuation of the markets is not very cheap. It is fair or above fair at this point of time. However, on the other hand, the Q1 numbers have been good. So if the Q2 numbers also are good and the H1 of this year versus H1 of last year show a good uptick in terms of sales and profits, then probably there will be more confidence in terms of giving a higher P to the markets. Now, in the current scenario or environment, I think corporate-facing banks is one space where I think there could be some upside because resolutions of NPAs are happening. The banks are sort of tweaking their models. So we have this last week come out with a buy on Axis Bank, although it has run up over the last month or two, but we think there is still scope for an upside from here.
Okay, corporate banks is what Deepak's liking. I just want to talk about Jubilant FoodWorks, and Ruchit, I want to come to you on this one. Jubilant FoodWorks, 74% done this year. Stocks trading at 1533 right now. Is there more potential upside?
Yeah, so far there are no signs of reversal of this uptrend which have been seen in this calendar year. Broadly, even if you see from a very short-term perspective, then all the corrective moves in the recent past has been more of a time-wise correction, wherein after an up move, whenever the momentum readings get overbought, prices stay in a sideways range for some time and then again resumes its uptrend. So that's what we have been seeing in last couple of weeks. Again, prices are trading in a very narrow range, but again this just seem to be a time-wise correction within an uptrend. So any long position should continue to be held on. From a trading perspective, whenever there is a breakout of this range or this time-wise correction, the breakout is now above 1578. So for short-term traders, whenever the stock prices break out above 1578, they can create fresh long positions over there. And for medium to long-term investors, if there are any long positions, they should continue to hold on.
Some mid-cap IT names, Mindtree, Emphasis, Hexaware. Is there a trade there? These stocks have also been up and about.
I think Emphasis looks interesting, particularly because we have seen within the mid-cap IT space, this stock has continuously shown an outperformance. Even at current levels, at current price juncture, the risk-reward ratio is very much favorable because the stop losses are quite small. 1227 should be the stop loss on fresh long positions over here for an expected target around 1320, 1315. Also within this space, Sonata Software is one of the name which had shown an outperformance in last few weeks. Today, the stock has given a gap up opening from its 20 DMA support. So fresh long position should be created in Sonata Software, keeping stock below 344. The stock has potential to cross the 380 mark very soon.
Okay, Ruchit, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. Deepak, it's actually Friday, but let me try and still ask you, what was the pick of the week and what was the rationale behind that?
Yeah, as I mentioned, Axis Bank was the pick of the week on Monday. Basically, the rationale there is that the deteriorating asset quality is now turning around. Retail's franchise is now getting strengthened. There is shift of focus towards higher rated corporates. Bank insurance tie-ups will prop up revenues, and there is a comfortable capital adequacy ratio. There are some concerns also about the uncertainty at the top management level, increase in NPL levels, limited value unlocking potential, and competition from peers. So basically, we felt that investors could buy the stock at the then CMP of 640 and add on declines to 567 to 577 band for targets of 735 and 815, which are 2.7 and 3 times FY20 ABV.
Okay. Deepak, we'll leave it on that note. Thank you so much for taking the time out and being with us and giving us that perspective. That's Deepak Jasani from HDFC Securities. So with his thoughts on market-specific pockets and some ideas as well to watch out for. Very flat for the markets, marginally in the green though, which is not a bad thing. The Nifty Bank too has recorded a little bit of lost ground. Taking a break at that point of time. On the other side, we discuss business outlook with Mahindra CIE with Chairman Hemant Luthra. He joins in our studios. And then ahead of the high-powered committee meeting on resolving power sector stress, we speak with Power Secretary Ajay Kumar Bhalla.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Back with IndianOpen right here on Bloomberg Quint. It is one of the country's largest auto component manufacturers and has a presence across India and Europe, arguably across the world. It's also well placed to make the most of the sharp rise in monthly vehicle sales as well. What could play spoil sport is the looming trade war, or would it? Joining us right now to talk about the prospects is the head honcho of Mahindra CIE Automotive, the chairman, Mr. Hemant Luthra, in our studios, I might add. Mr. Luthra, good having you. Thanks so much for taking the time out. Actually, just wondering, let me start off with that basic premise. Does this increase conversation around the trade war, does it hamper business, or for a preeminent auto component exporter stroke manufacturer, is it actually good news?
You know what the good news is, that it's making headlines, okay, but under that surface of those headlines, there's no change. So Mahindra CIE has a plant in Mexico, Bilforge, which we acquired. Okay. they have been told by the OEMs who've invested several $1 billion in Mexico to double capacity. If you read the latest agreement which NAFTA, Mr. Trump and his team have signed, okay, it says that the increased tariffs are on those cars where a certain percentage of components, okay, is on the basis of value added, total value added in the car. And what Bloomberg, I think, said in their news is that NAFTA treaty, within inverted commas, is a lemon. So it's smoke and mirrors, it's business as usual, and we are expanding capacity in Mexico, and we are expanding capacity wherever else we can.
Are you almost saying, which a lot of people are actually saying, that come closer to the midterms, there will be a lot of noise in the political arena, but it will probably not have a business impact in a meaningful way?
See, I can't talk about the politics of the noise, okay, and I'm not an expert on Indian politics, much less on American politics. But whatever our people are saying is that that we are closest to the action in Mexico. Okay. Our guys are saying that we're running out of capacity. So we are moving more and more equipment into Mexico. We are offloading from Mexico to India. So otherwise you can't get 26% year-on-year growth and 40% year-on-year growth in EBITDA. So I'm not seeing anything.
Okay.
You can accuse me of having the glass always half full, but I'm not seeing any downside.
Which is awesome. So let's talk about the upsides then. How is business looking? I believe you had done this phase one of, for lack of a better word, restructuring, or as you reorganization, as the case may be. If I can divide that, the time gone by into phase one and the time to come ahead, maybe next 2, 3, 5 years into phase two, how is phase two looking on the basis of what you've already done in phase one?
See, the biggest advantage that we had in phase one, both Mahindra and CIE, was that all the acquisitions that we had done, okay, but we never participated in an auction. Even the CIE deal that we did, okay, took us 3 years, and over many rounds of tapas and wine in every bar in Bilbao, Madrid, and Barcelona. Okay. They came to attend my daughter's wedding. I went to attend their baptism. It became 2 families, so pre-merger integration has been the order of the day.
Interesting.
Okay. So people knew each other, understood each other, we knew the costing systems and so on. The biggest challenge was that some part of Europe, okay, German costs were high. Okay. We had to do something in Germany. We shut one plant down. We made one mistake in Germany, which was to offload to somebody in Czechoslovakia machining. Okay. And because of that, we suffered a couple of quarters because the vendor went broke. We had to pull back everything in-house. But the second part of integration now is how can we take on some more of the technologies that CIE has and we don't. So for example, aluminum, for example, plastics, okay, as we all go lightweight. So we need to get those technologies. And our acquisition targets are based around making sure we do that in phase two. Okay, so get technology inside, transfer product from Europe to India much more effectively than we've done, as people in Europe have got comfortable, as a CIE customer in Europe have become comfortable with us. And also then make some acquisitions which is the fastest growing automobile market in the world just now.
True. So, okay, just to get some clarity, would you, I mean, what would the next 5 years entail? Would it entail getting your foot into the door at newer customers, even if it comes at a small cost on the operational metrics, or expand the existing pool of customers with the newer technologies that CIE might have, but Mahindra CIE doesn't have, which you just alluded to?
So both. Okay. The first is you get hold of the technologies. Okay. Now the first step actually is you make sure that existing technologies and facilities get accepted and approved by European customers of CIE. That phase has happened. That's why you see Bilforge exporting 20% and our exports from the gears business going up. The second part of the technology is that can we get CIE technology here?
In India, you mean?
Sorry?
In India, you mean?
In India, so that we can leverage our lower cost, which is... The third part is that we can't be so patient, and fortunately the government is helping us. Okay. Because when I met Maruti, the chairman said that I am 50% market share, I intend to maintain it, I've got $5 billion of cash, I need suppliers who are well capitalized, we're reducing the number of vendors. You can't have a better capitalized company than ours, and therefore we are getting more market share. The other way we are being helped by, unfortunately or fortunately, is that some of the companies are going broke. Customers are not willing to take chances against those who are going broke, and many of them are coming to us. So our focus on M&A is, let's look at those that complement existing technology. So complement existing geographies, complement existing customers. So if I don't have as much share of Maruti that I like, I have about 10% of my total turnover and I want it higher, okay, then I'll make an acquisition which is Maruti, the supplier to Maruti.
Sure.
If I don't have aluminum, then I'll make an acquisition that is aluminum. If I'm in the west, I will make an acquisition in the north and in the south. So the second phase of growth that we see is coming from various possibilities, including, fortunately for us, but unfortunately for those who took on too much debt.
But would it be a string of pearls strategy that you would need to do in order to get this foot in the door, or would you have to deploy a larger war chest?
See, I have got huge capability just now, because if you look at the numbers, okay, our EBITDA is running at a run rate of about 1,000 crores a year. Our turnover is about 8,000. Actually, maybe the EBITDA is running at about 1,200 crores a year. Our debt to EBITDA is 0.6. Okay. Our debt equity ratio is less than 0.7, 0.8. Okay. So the war chest, fortunately, does not need any equity. The war chest exists. Okay. The only catch in that war chest is, okay, that for some reason, which we are appealing to the government, unfortunately we've heard a sympathetic voice, is that there's an archaic regulation which says that if you're a foreign-owned Indian company, you cannot borrow in rupees for making an acquisition. But if you're a foreign-owned Indian company, you can borrow from Indian banks, okay, to make an acquisition abroad. So I went to DIPP, I went to PMO and said, we are talking about Make in India. As a global company, I have an option to buy an aluminum facility in India, but I cannot borrow for that. Okay. I have the option to buy an aluminum facility in Korea, for which I can borrow. So why do you want me to make in Korea and not make in India?
Okay.
So because of that sympathetic ear, okay, we will be doing acquisitions. We will be doing acquisition on the, mostly on the basis of the fact that conservative estimates say that if you have post-acquisition 2.5, 3 times debt to EBITDA, you're all right. Just now we are at 0.5, so there is headroom.
You were talking about making an acquisition not just abroad but in India as well, in a meaningful way.
We have to.
Right.
We have to. India is a hell of a growth opportunity.
Tell us about it. I mean, we've spoken about taking the CIE technology to some of the global vendors. You've done that in Europe successfully. How does the Indian pie look like right now?
Well, the Indian pie looks like A is growing 9, 10, 11%, whatever number you can put on it. Okay. If Maruti is planning to have 50% market share and is spending $5 billion and they need well-capitalized customers and they're shrinking their number of vendors from 700 to 300, and Mahindra and Tata and all doing the same thing because they have to spend a lot more money designing cars, upgrading the technology, cleaning up their engines. Okay. More and more of the design work comes to people who are capable of attracting engineers and are capable of. Okay. So all over the world there's a tendency to shrink the number of vendors. Consolidation will benefit from that. The other thing that's very interesting is that look at the model that Mahindra CIE has created. I'm the chairman of a company which is majority owned by the Spanish
partner.
But there is nobody here who is spending more than 7 days a week. We look at Billforge, the acquisition we made, no changes, same management. We have the right to change, but they don't change it. Okay. It's a very interesting model because what has happened is that the cousin generation of auto component manufacturers their kids, the second generation, okay, don't necessarily want to beat metal in India. So they want to work for Bloomberg, they want to work for people who are at the in the IT space, in the fintech space. So a number of first generation people who are now getting into their late 60s and 70s are saying, my son doesn't want it. I don't want to part with it. It's my legacy. What we are saying to them, sell us 51% and continue to run the company. You need capital? Take it from us. Don't take on more debt. So the acquisition strategy is still very much partnership. The growth strategy is still very much partnership.
Yeah.
And the other thing that is beneficial to, they're saying take a choice. You want cash, take cash. You want stock in your own company, keep stock in your own company. You want the option to merge it upwards into CIE to get, Mahindra CIE to get liquidity, take that. Do whatever you like, okay, but don't hold back on growth because your son is not there.
Yeah, well, I remember certain conversations in the past as well, Mr. Luthra, how Mahindra CI acquisition happened, but Mahindra is the first name and CI is the second name. Or for that matter, the German company that you acquired a few years back, wherein the promoter was sobbing about giving it away, was comfortable giving it to you as opposed to anybody else. So where does...
The only problem with all this is that I'm in danger of being on the wrong side of my wife. Because she says that I said yes to you in 18 months. And these people are saying 24, but you're still wooing them.
Okay. Well, interesting. Let's talk about what does all of this, Mr. Luthra, do to the growth prospects in numbers, and how large do you become? I mean, I'm not talking about really what will happen the next quarter or this calendar year. Let's assume 10-15% would happen. But my point is 5 years out, how much of a multiple from the current size do you expect Mahindra CI to be at? Combined organic and inorganic growth.
See, I think you and I will get arrested if I start giving numbers.
No, I'm okay.
So we have
just
to,
estimates.
our thumb rule is, okay, we have to grow 50% faster than market.
Okay.
Okay, our competitors. Because we are well capitalized, we don't have any, we don't have any constraints in terms of the ownership, okay, and second thing that we have to make sure is that if CI is running Europe at 15-16% EBITDA, okay,
you have to reach that.
I am running at 14%, and okay, maybe I have to reach that also. If CI is running at 15% EBIT and therefore appropriate ROC of close to 15, north of 15%, and I'm running EBIT 11, not 15, and I'm running ROC 12, not 14, I have to reach that. Okay. I think we have to look after the bottom line. Okay, the top line will happen because of customers which will come to us for consolidation. Having said all of this, because you will not let me get away with...
No, I'm not asking you for a specific number. I'm really asking you about what's the size.
I'd be disappointed that if we could not hit, keep up this pace for at least another 3 years, which is therefore our what do you call, budget. But the budget is like a 15-20% growth rate. Okay. This year we've been fortunate that it has been 26% year on year. So I don't think I can keep up with 26%. But
a reasonably healthy growth rate, add better margins, better return ratios, better profitability. I think that would be the sum and substance.
That's what it's all about.
Great, and we wish you all the best for that, Mr. Luthra. Thank you so much for taking the time out and joining us in your studios. It's a pleasure having you today.
Thank you.
Great having you. Okay, that's, well, an interesting conversation, and these conversations always are with Mr. Hemant Luthra. Over the years, I've seen that, and yet one more coming in. The next piece on for Indian Open today is about the power space. The government's caught in a bind after the Allahabad High Court set a 15-day deadline for the Finance Ministry to make up its mind on whether to use Section 7 of the RBI Act or no. This after power producers went to court seeking relaxation from the banking regulators' 180-day deadline. A high-powered committee meeting has been called today to discuss the way forward. But ahead of that, Yatin Mota caught up with someone who's been at the center of all the action, Power Secretary Ajay Kumar Bhalla. Listen into what he had to say about the possible solutions.
See, based on the issues raised by the IPPs, the terms of reference of the committee have been devised basically to address 3 types of issues mainly. One side is the fuel issues, a shortage of fuel for some plants, or there are no linkages available. Other is the, I would link it to the lack of PPAs also, as the linkage is available under Shakti policy provided you have a power purchase agreement. So how best we can in the short time frame we can find a solution to that. Other is the payment by discoms. Already the PPAs have certain security mechanisms, but it seems that is not working. Can we look at some better mechanism to ensure payment guarantees? And then there were some regulatory issues being pointed out by the IPPs, delays in pass-through of the change in law and all. Again, that also will be examined by the committee and see what best systems we can resolve. Basically, to look at in the short-term market, if these IPPs can be allowed to sell power using a transparent mechanism and a linkage can be made available. So these are the issues which will be deliberated in the committee. This is basically the TOR of the committee. So, we expect all these issues will be discussed there.
And sir, do you expect some intervention of the finance ministry or the government in this regard? Because, we have the RBI under various sections, they can also receive directives from the central government. So do you think this should be a coordinated effort between the ministry and the RBI so that the issues that you were talking about earlier can be, resolved in a much meaningful manner?
Yes, see, as per the court order also, RBI, Power Ministry has been asked to invite the representative of RBI also for the meeting, which we have done. Ministry of Finance in any case is part of that committee. So we expect that this issue will also be deliberated for a resolution. I have heard some media reports from Ministry of Finance saying that this issue may also be placed before the committee for discussion. So maybe tomorrow we'll understand whether this issue of resolving some of the assets by giving little extra time would also be possible or not. So it will be discussed in the committee tomorrow.
Okay. But sir, if you look at it from the banking side, and we spoke to a lot of bankers, they say that, when it comes to the NCLT proceedings, the NPA proceedings, various sectors cannot be given preferential allotment and, a preferential treatment, so to say, because, we had an entire case coming up with the steel sector, the auctions went on successfully. Do you think, power sector is in a special situation, probably is a national asset, we cannot probably substitute it via imports or some other mechanism, and probably needs some preferential allotment and preferential treatment, so to say, when it comes to the fuel linkages, resolution with banks, so on and so forth?
See, what we would like others to appreciate is it's more of a regulated sector.
Right.
Though we have brought in generation has been totally delicensed, but the sale of power, the regulatory structures controlling that, and the sale of coal and all are under a regulated regime as far as power sector is concerned, basically to ensure energy security for the country and ensuring power supply at a reasonable prices. Now, a power sector functions within these constraints. So we definitely need to look at some of the issues related to power sector separately. On one hand, it's okay, the lenders are very right, RBI also has been saying these are sectoral issues which we need to address. Yeah, it may take some time to address these issues. Some of the coal shortages have come due to cancellation of coal blocks and all. So, it may take some more time to resolve that. Shakti policy has been put in place to ensure that the linkage is available. But such plants which can get linkage under Shakti policy are still looking for PPAs from the discoms. So, the solution is not available just off the shelf. That's why the whole request was that, if assets can be resolved in a better manner, it will be good. And lenders definitely have tried their best to solve some of the commissioned assets in the recent phenomena, in the recent times. So let's see, what best can be done. I would say that there are different aspects of the whole sector which we need to address separately. Some can be addressed in the very, very short term and some in the medium term. So we will definitely be debating all these points tomorrow in the committee.
Okay. And sir, I'm sure you and your ministry must be speaking to lenders and state lenders like REC and PFC. What do you make out of the new Parivartan scheme which has been proposed by REC? Do you think that should be also able to resolve certain issues which you earlier pointed out for the power sector?
See, the asset management company, construction company, already there's a concept there. In Parivartan, REC had suggested certain changes, which of course are being discussed with the lenders and RBI, because it needs certain concessions under the RBI scheme of asset management companies. So, that point is being discussed by the REC with RBI and lenders to reach a consensus. Some of these assets can be put as a warehouse in the warehousing company. Of course, that will give some breathing time for us to address the sectoral issues, resolve their fuel issues and PPA issues, and till that time the assets can be put on hold. So that scheme, as I said, it needs some, the way it has been suggested by REC, needs some concessions from RBI. The matter has been taken by, I understand, by REC CMD with the lenders and RBI. So if that comes through, then definitely, some of these assets can be considered for that warehousing.
But sir, don't you think warehousing of power assets is not the same thing as delaying the problems of today? Will there be any overlap of problems or some issues in terms of the warehousing mechanism? What's your view?
No. As I said, you have to look at warehousing mechanism. There are some issues which presently is the upfront value of these assets at what value these will be transferred,
right,
and how the lenders will give it a treatment in their books. Now that issue is being separately handled by REC and with the lenders and all. Our point would be that in the immediate time frame, perhaps sufficient power purchase agreements may not be available, and for short-term requirement of power in the market, already some commissioned assets are already there. Some of these assets which are near readiness and all, which can be turned around with little more investment, perhaps can go to asset management company where it can be held for some time and then can be considered. So all assets need not go into this, and all assets cannot be resolved immediately outside in the present regime. So there will have to be different treatments for the different assets depending upon their readiness, their availability of coal, their PPAs and other things. The stress is due to different reasons. At times the equity investment of the promoter is gone, so he's no more able to get more money. Otherwise, sometimes the tariff bid is very aggressive. He's not able to service the debt with that tariff. So there are different issues concerning different assets which would need to be looked at closely and addressed separately.
Sir, I would like to conclude on a talk where you already said about the funding issues. Of course, the existing promoters have already some issues with them, and there are legacy issues like power purchase agreement not being in place, the coal not being in place, fuel not being tied up. How would your ministry ensure, and how would the committee also look at this angle of funding, because there has to be something lucrative for a new buyer or a new investor coming in for the power sector. For the past many years we have seen the power sector is in stress, be it coal capacities or gas based capacities. How do you think the government can ensure, and your ministry can ensure, that new capital flows into the power sector, and how would you ensure that the encouragement or the real benefits should come to the investors who will now come in with their risk capital?
See, we have certain projections for requirement of power in this country, looking at the growth pattern. And the kind of infrastructure investments are happening in the power sector at the lowest levels. Basically under the Deen Dayal Upadhyaya Gram Jyoti Yojana and Saubhagya Yojana. A lot of demand definitely will come up. We have seen wherever we have improved infrastructure and given connections, the demand in those places have increased suddenly. Now basically the demand was there, but lack of infrastructure to carry the power and all was keeping the demand hidden. So more investment in reaching the electricity to the remote corners of the country definitely is going to bring in a lot of demand. The Central Electricity Authority has already made certain projections in which some of the commissioned plants and the pipeline capacities have also been considered. So we definitely see that by 2022 a large percentage of this power can be accommodated, can be purchased, can be, I mean, there could be PPAs. Only thing perhaps we'll have to look at the structure, the way power is being procured. Long-term PPAs definitely lead to a fixed cost burden on the states, so states are a little shy of entering into further long-term PPAs. They have plenty of MOUs signed in 2011, which are there in their kitty, where they had with the government companies, they had signed those agreements, which will result into PPAs once the plants are commissioned. So all these factors have to be looked at, and then a solution found for. That's what I'm saying. I mean, whether we can look at some medium-term, short-term market where power can be sold, provided the coal is available for that purpose, and then market builds up. Definitely there is a requirement in the market. If we improve further infrastructure on the state transmission as well as the distribution, sub-distribution level infrastructure, demand definitely will be there. So we expect that these assets in a certain time frame can definitely be put to use.